What's up everybody, it's your boy James, and today we're going to be diving deep into the topic of what's making the whole real estate world change right now. And that is the Big Beautiful Bill Act. Guys, recently signed into law in July 4th, 2025, this massive bill is a piece of legislation that's poised to reshape the housing market. From home prices to investment opportunities to affordable housing, whether you're a first-time home buyer, seasoned investors, or renters, or just curious about what is happening next in the real estate market, this video is for you. We're going to unpack the bill key provisions, explore who wins, who faces challenges, and share practical tips on navigating the new landscape. So grab some coffee, get comfortable, and let's dive in. Okay guys, so let's start with the basic. The Big Beautiful Bill Act is a sweeping tax bill that is a spending package built based on the premise of the 2017 Tax Cut and Job Act, making many of the provisions permanent while introducing new incentives reforms. It's a complex bill touching everything from corporate taxes, individual deductions, but today we're going to be zoning into the impact of the real estate and how it affects homeowners, buyers, investors, developers, renters in different ways, and how the ripple effect will affect you throughout nationwide. So the big question here is that how will it change the way we buy, sell, or invest in real estate? So let's break down step by steps. First off, let's talk about the state and local tax deduction cap, known as the SALT. Under 2017 tax law, the SALT deduction was capped at $10,000, which hit homeowners in high state taxes like California, New York, New Jersey, Illinois really hard. The Big Beautiful Bill raises that SALT cap rate to $40,000 for household earners earning under $500,000. Guys, this is a game changer for middle class and upper middle class homeowners in these areas, and that means more tax relief means more money in their pocket, which could fuel demand for homeowners in an already expensive market. But here's the flip side to it, guys. Economists warned that this could drive up home prices, making it tougher for first-time home buyers to compete in markets like San Francisco's or New York or Manhattan. Next up, the bill make mortgage interest deductions permanent for home loans up to $750,000. The deduction let homeowners write off interest that is paid to their mortgage, which reduced their tax bill. By locking this in, the bill provides certain home buyers and refinancers, especially in the market where interest rate is super high and volatile. By locking this in, the bill provides certainty for home buyers and refinancers in a market where interest rate is super volatile. For example, if you're buying a home that is $600,000 with a 30-year mortgage, the deduction could save you thousands of dollars annually, depending on your rates and your tax bracket. For real estate investors, provisions like the 1031 exchange, like-kind exchange, is huge. This provision let you sell your property and reinvest the proceeds in similar properties while deferring capital gains. Imagine selling a rental property in Austin for $200,000 in profit and using that to buy a multifamily unit in Dallas without getting taxed. That's the flexibility of the investment capital moving to another investment capital, which is super healthy for the real estate market. Another major win for investor and developer is the reinstated 100% depreciation bonus through 2030. This allows you to deduct the full cost of property improvement like HVAC system, roofing, renovations in the year that they are made, rather than spreading it out through the decades. For commercial real estate, like office building, warehouses, this could saving millions in upfront tax saving. Experts predict that this sparked a new wave of constructions, renovation, especially in industrial and multifamily sectors. Also, guys, the bill boosts affordable housing through an expanded low-income tax credit, also known as LIHTC, and it tweaks for opportunity zone incentives. So the low-income housing incentives now include lower bond requirements, down from 50% to 25%, making it easier for developers to finance affordable housing projects. So according to the National Low Income Housing Coalition, this could lead to 200,000 new affordable units over the next decades. Opportunity zones, which offer tax breaks for investing in the underserving area, could also boost and extended timeline with the new eligible rules, encouraging development in places like rural communities and urban area. Finally, the qualified business income deduction, or known as the QBI, remains at 20% throughout the business like real estate partnerships and LLC. This is a lifeline of a small-scale landlord, real estate agents, developers, letting them keep more of their profit. For example, if a landlord earns $150,000 in rental income, they could save $6,000 or more annually on taxes. This could go toward property upgrades and investment. So let's zoom into the bigger picture of the Big Beautiful Bill. The Big Beautiful Bill comes at the time where the real estate market is already grappling with the high interest rate, low inventory, and affordability challenges. The Federal Reserve effort to commit inflation pushed real estate mortgages rate to 7%, and the tax bill break could stimulate the demand. But it also had 4 to 5 trillion in federal deficit, which Congress estimate. That could pressure interest rate higher, making borrowing more expensive and home buyers and developers alike. Regionally, the impact will vary in high cost, high tax state. The SALT cap increase could supercharge demand, pushing median home price up, already $1 million in places like San Jose, or even higher. So in contrast, like market like Texas or Florida that has lower tax bracket and lower tax rate makes home more affordable. So you might see less of an impact on the SALT, but there's other benefits. For example, like investors actively driven by 1031 exchange and bonus depreciation. So rural area, underserving area could see a booming in the affordable housing market and commercial project thanks to increase in affordable housing credits. So who's coming out ahead? High income owners and real estate investors are the clear winner in all of this. The SALT cap increase, permanent QBI deductions, and bonus depreciation give wealthier household and professionals significant tax advantages. For example, a family in New Jersey with a $1.5 million home could save $20,000 or more annually on taxes, freeing up cash for renovations, a second home. Investors, especially in commercial and multifamily properties, will find tax incentive for new projects and more financial access. Another person is developer focusing on affordable housing also gain. With the opportunity zone tweak and unlocking private equity investments, this creates new rental units and revitalized communities. This is the lifeline for renters in cities where median rent could have soared like $3,000 a month like Seattle or Boston. But it's not all good news, guys. First-time home buyers and low-income renters may struggle. High demands in high-cost area could push home price out of reach, especially with high interest rate currently today. So according to the National Association of Realtor notes that the median price nationwide is already up 5% year over year as of June 2025. A renter hoping for relief might not see immediate benefits as affordable housing project might take years to complete. Plus, the bill deficit impact could lead to tighter lending standards, making it harder for middle-class buyer to qualify for a mortgage. So how can you make most of these changes? Here are the 5 actionable tips that you can implement to be successful. First of all, home buyers. If you're in a high tax state, the SALT cap increase could make it now a good time to buy, but act fast because the price could climb. Work with an advisor and work with a tax advisor to maximize your mortgage interest deductions and explore first-time home buying program to offset some of the costs. Investors, leverage 1031 exchange to diversify your portfolio. Look into more of an opportunity zones for long-term tax benefit, especially up-and-coming area. Bonus depreciation make it a good time to renovate and upgrade property, so prioritize project with high ROI. Renters, research new affordable housing development in your area, especially opportunity zones. Check out local housing authority for LIHTC funding projects, which often have some rental properties below market rent. Developers, tap into the expanded the LIHTC and opportunity zoning incentives. Partner with local governments to streamline permits and access grant. Focus on multifamily, mixed-use projects to meet growing rental demand. And lastly, guys, for real estate profession, educate yourself about the bills, tax benefits like the QBI deduction for agents and landlords. Stay up to date about the regional market trends as the bill will impact different cities across different states. Looking ahead, guys, the Big Beautiful Bill Act set the stage for a dynamic real estate market over the next 10 plus years. The tax incentives would likely drive investments and development, but affordability remains a critical challenge right now. Policymakers will need to monitor rising prices and interest rate and how it will affect first-time home buyer, renters, and everybody. For now, the bill offers opportunities for those who can navigate the complexity, but it also underscores the needs for a broader solutions in the housing market. So what does this mean for you? If you're in real estate, whether you're a buyer, seller, investor, or professional, now is the time to get strategic. Consult with a financial and a tax expert and understand how these challenges apply to your situation. Keep an eye out on the local market trend. Look at data from platforms like Zillow, Redfin, which can help you spot opportunities early. Alright guys, so that's our deep dive into the Big Beautiful Bill Act and how it impacts the real estate market. What do you think? Excited about the opportunities or concerned about the challenges? Drop your thoughts and comments below and keep the conversation going. If you found this video helpful, guys, give this video a thumbs up, subscribe, hit that notifications so that you guys can get more insights into the real estate market. For personal advice, definitely connect with our team. Go to buywithfam.com. We'd love to help you guys in any way we can. Thanks for watching this video, guys. Peace and love. Peace and love.